Unmute.
Oh,
All
I think we
right.
were muted for a
Now we're
second
muted.
there.
All right. I think everybody can hear us now, so we'll do the intro again. So welcome to everybody to our quarterly economic update here at Stein Wealth Advisors. I'm here with my partners, Josh and Melissa Stein, and we're going to cover some of the things going on in your economy and some of the things that we think as your advisors you should be keeping in top of mind. So we had a lot going on in the fourth quarter. I think everybody's happy that they got their Christmas presents on time or close to it. But there are some more bottlenecks going on as we get out of COVID. So we're going to talk a little bit about that and see what else is going on. So Josh, big driver last year was inflation. What did you see as far as that and the Fed policy, and what are you seeing going on with that?
Well, yeah, I mean, I think most people, if you were to ask them what their number one question or concern is right now, it's all about inflation. We hear about it on the news. We maybe even see it. Probably not. Maybe we probably most definitely see it. Feel it in our everyday lives. Spending, and then we certainly see it with regards to some of the impacts economically, financially. So that I think has been really the theme of 2021, and likely will be probably the number one factor to determine what 2022 is going to look like.
Yeah, it's definitely going to be a key driver of the economy, I think, in markets in 2022.
Yeah, it's interesting because we started doing these webinars the very beginning of 2020 when COVID really started to make an impact. And at that time, I remember there were multiple webinar discussions about inflation. Then, if you remember, it was, we're not seeing inflation yet. And if you look at the charts to track inflation, actually inflation dipped because essentially you had no demand. And we always really kind of said something is going to change when you have a Federal Reserve that prints money. And we could probably spend way more time than we need getting into where inflation comes from and how and why.
Yeah,
but
we've done that, I think.
We've done that. But just like real quick, kind of like cheat sheet on that, it's not because of government spending. It's because of government printing. And there's a difference. I won't get into why right now because we just don't really, it's not as important, but we're here now. We've gotten through this low demand. Now it's high demand, and we have way more money in the money supply than really ever in the history of our economy. And so now here we are, we have inflation. Not a surprise though, is it?
And there's a couple other drivers of that too, though, guys, right? I mean, we have a lot of clients that are in a housing transition. We're dealing with a housing market that's still 7 million houses short. So that is adding pressure to that and the inflationary pressures of that. We're seeing these supply chains open back up. I think all the kids got their Christmas presents, like I said, but
I just got 2 in the mail last week that just showed up.
Oh man. Well, but Melissa, what else is going on out there? I think there were some other things going on that are driving this inflation. It's not always as clean as, 7% last year.
Right. No, I mean, I agree with what you're saying. I mean, we have, Josh said, we're kind of here. There's, in addition to Fed policy, which is going to be the biggest driver of this, which I think is what Josh is getting to, the downward pressure, from the real estate market, as well as the supply chain things that we're working through, which are healing. But as Josh said, I mean, and you can continue to expound upon this if you want, is, the Fed policy and what that's going to mean for the economy and market this year. Certainly I think our outlook is generally positive. We still think there'll be growth for 2022, but is it going to be the same robust level of growth we had in 2021 from a stock market's perspective or economy? I mean, we maybe aren't as confident on that. So,
yeah, inflation, like I had mentioned, was not a surprise to us. Really wasn't a surprise to anybody. I think the only thing that maybe was surprising was that a lot of the numbers weren't as transitory. Given just the continuation of COVID and how we really haven't necessarily gotten out of that issue. Although, I will say, for better or for worse, it's just becoming part of life. And although more people are testing positive than ever before. Hospitalizations are down, deaths are down. People are just kind of figuring out how to live with it. And the reality is, right now, today, corporations are still making money. You know, people are still spending, whether or not it's their money or the stimulus money is debatable, but
Well,
companies
the
are profitable.
fundamental drivers of the economy and of stocks, like they're still good.
In
There's
fact,
profitability.
yeah, in fact, maybe they're even better seen this year than last year, which certainly last year, a lot of the growth was kind of on the tailwinds of the stimulus money. And I think this year will be a big kind of
Transition
to real fundamentals. Like what we'll see in the economy is what is really there, except for maybe this inflation issue.
Yeah.
And that's also been driving some of the stock market volatility, particularly in growth stocks, because those are most susceptible to, a very rapid increase in interest rates, or to basically combat inflation, or hypothetically they are. So that is driving some of the short-term volatility. That doesn't mean that in the long-term growth stocks aren't going to do well. It just means it might, that's how the market and that particular asset class is reacting right now. So like the NASDAQ has been down a lot more relative to some of the other indexes. But in general, I mean, we have been more focused towards like the value and cyclical stocks, and less maybe overweighted in those growth stocks, knowing that some of those cyclical stocks haven't fully recovered from COVID yet. And as the supply chain, the economy continues to heal, regardless of whether it goes away at this point, we're figuring out how to deal with it. So, I mean, that's one of the bigger changes we've made in portfolios over the last quarter, is sort of shifting back from an overweight in growth stocks, getting a little bit more balance back into those value or cyclical stocks that we think still have some upside potential.
Let me make sure I'm hearing you right though. So Melissa, we're saying that as this Fed policy raises rates and makes debt more expensive, companies like typically our tech companies on the NASDAQ that are more growth oriented, that use leverage to grow their company, they're the ones that are going to get hurt.
Well, historically or hypothetically, they're the most susceptible.
So I just want to make
sure we don't actually know if that's true.
But we're starting to see those pressures as the Fed is playing. We might increase rates.
Maybe not even that they're getting hurt. They may make just as much money as they did the year before. It's that the market doesn't value them the same way based on valuations relative to actual earnings.
Can you talk about that a little bit? Because I think that's a little confusing to like to most people, which is just valuations in general, and how the interest rates, how that has an impact on it, because most of the models are CAPM models, right? And they have an interest rate they're using it as an assumption.
Sure. Well, there's a lot going on.
Yeah.
There,
okay. I don't want to get too technical,
but I'll say this. So the secondary market is ultimately what prices a company, not how much money they make. Certainly that has a lot to do with it.
Define the secondary market. I think
the stock market.
Don't even understand what that
stock
means.
market. You and me, anybody who buys it. If I want to buy IBM stock, I'm willing to pay a certain price for it.
It's kind of like the real estate market.
Yeah.
Like your realtor can say your house is worth $300,000, but if someone's willing to come in and pay $350 for it, then that's the market.
I might take into consideration how much IBM makes, but at the end of the day, I may be willing to pay more or less for it than one of its competitors. Here's a perfect example. Let's take Tesla, for example. Is Tesla an automobile company? Yeah, they make cars, but they trade significantly more than their competitors, than any other car company. Their valuation, their multiples that you use, earnings relative to their share price, is significantly more, because people are willing to pay more for a company like Tesla. Why? We won't get into that right now, but that's where this valuation comes from. Now, to the same extent, that kind of computation determined I'm willing to pay 10x earnings for Tesla, but I may only be willing to pay 10x earnings or 5x earnings for Ford. That's all based on a lot of other economic factors. That's based on treasury rates. That's based on other things. So if those change, I may be willing to pay less for the same company, even though their earnings are more or the same. And that's really where we're seeing tech companies, because they tend to trade at higher multiples of revenue. And that's very dependent on risk. And if I can get more return on something more conservative, like a bond, I may be willing to pay less for a stock that has more risk, even though their earnings are exactly the same.
That's interesting, guys. And we're seeing a lot of these things shake out in the economy right now. So a lot of this volatility, these price changes, the inflation, all of this is kind of like a perfect storm, if you will. Now, there's one more thing going on. Go ahead.
Oh, no, I was actually just thinking of something funny, because speaking of Tesla, our 7-year-old informed me like 2 days ago that Elon Musk is the wealthiest man in the world. Dude.
I think he is.
And he is. I don't, you know how he knows that? He asked Alexa.
Okay.
So.
Brave new world.
And Jeff Bezos
Yes,
is the second
yes,
best.
I know, but he's like, I'm
There's
like,
some place
he
at
was asking
Amazon
me,
that
and I'm like,
Jeff's
I don't even know anymore. But anyway, so.
So there's one more thing going on, and this has been a hot topic of conversation, I think, but it's very unique situation, one that I don't think even in our, was it 17 years now that we've been working, that I don't think I've ever seen a jobs market like this. This is a very unique market. So just to clarify, what we had during COVID, we had 152 million US workers, and a lot of folks stopped working during the pandemic, and 149 million came back. So we're still 3 million workers short in this country. Now, those are typically happening in particular sectors. Hospitality primarily is the highest rate, as well as our service industry and our healthcare sector. So some of that is laying pressure on our healthcare.
We're really seeing it everywhere. I think most people are seeing help wanted signs everywhere. I mean, even in our industry across
everywhere. Professional services, absolutely.
Companies are hiring and they are struggling to find people.
So when we
So, like,
looked
where
at
did
this
they
data, it
go?
was interesting. Now, Josh uncovered some interesting points because they're calling it the Great Resignation or the Big Quit. I think after what Josh shared with us, it's something totally different. Josh, could you?
Well, if we look at the news that just broke a couple days ago, the most recent jobs report, payrolls rose 199,000 in terms of new jobs added versus an expected 450,000, which sounds really bad. In fact, it was the fourth out of the last 5 months that had missed expectations relatively significantly. And that doesn't sound good, right? I mean, we would have expected people to go back to work at this point. However, there's other ways of looking at how many people are working or have gone back to work. And another one is called civilian unemployment. And it's essentially an alternative measure, but it takes things into consideration that the payroll jobs reports don't necessarily take into consideration. A big one is small businesses. So somebody who's in transition, who maybe got laid off, or somebody who's been working from home and they've decided to open up their own business
or consult
or whatever it is, they'll get picked up in the civilian employment report, but they won't necessarily get picked up yet in the non-farm payroll report. Civilian employment reports showed a gain of 651,000 jobs in December and over 1 million jobs in November. And I think this is good for a couple of reasons. One, I think it shows, A, way more people are actually coming back to work.
Yeah.
B, those small businesses eventually will get caught up in the payroll reports. It's just not yet.
And they're starting to replace a lot of the small businesses that failed or closed as a result.
They're helping supply chains get back on. And also, I'm sorry.
No, that's fine.
They're going to hire people.
Right.
And those people are going to create new jobs, and those are going to get picked up in the payroll reports. And so I actually think that that's a really good kind of like peel back the layers of the onion. You find it's actually a good statistic.
Well, it's a unique situation. You can't just look at the standard statistics.
Absolutely.
But I mean, I will say as a little microcosm of that, I would say there's been an unusually large part of my client base that has left their, regular corporate jobs and are no longer W-2 employees. They're doing part-time work, consulting.
Yep.
They're opening their own businesses. They're forming partnerships in, they're just starting that now. And some of them are taking off faster than others, but I've definitely consulted on all that, a lot of that.
And that's proven in these numbers.
Right. So that actually just makes sense. I mean,
so can we not call it the Great Resignation anymore? We'll call it the Great Self-Investment, or maybe instead of the Big Quit, we'll call it the Big Start, because it's the restarting of all this small business in America, baby.
And I think that's encouraging.
That is encouraging.
And that does also show that employers who still need people, they may be struggling to find new people.
It's true.
They're going to have to pay their employees who they have maybe more, or to incent other employees to come to them, they're going to have to pay them more. And the reality is, and although it's kind of weird to say it, they're going to have to keep employees that they may not necessarily want. none of those things are necessarily good for profitability, for productivity. And I think that, that may come into consideration a little bit when you look at like corporate
growth
and profitability this year. It's kind of a weird way to look at it. Like, yeah, they may have the people, but they're not the people they necessarily want, and they're gonna have to pay them more. But I don't necessarily think that that's something that's gonna like spin the economy into a recession.
Right.
Yeah.
Well, we've had a lot of
We'll see.
stagflation in wages for a while, so it's interesting. So we talked a lot about the key events, and I think that was a good
Do
conversation.
we want to see if there's any questions?
Yeah,
Okay,
let's stop for some
Does
questions
anyone
here.
want to ask a question? You could just either at the bottom of
Yeah,
the
there's a
screen,
chat
you can raise
or
your
Q&A.
hand, you can chat. We'll keep going, but if anyone does, just let us know. I mean, we do this for you. Of course, we think all this is really fun and exciting discussion, but you might think otherwise or have other things on your mind. So we're here to answer any questions.
Well, while we're waiting on any questions, I'll just kind of throw out there a couple of things that we
Yeah.
spoke recently about. We had a whole webinar about taxes where we had an accountant come on. And we've spent time in other webinars talking about taxes. So far, it doesn't look like there's been a whole lot of movement in Biden's tax proposals. And on top of that, the Build Back a Better Plan entitlements doesn't necessarily look like it's caught a whole lot of steam. That 1.5 plus trillion dollar bill potentially fizzling out. As you mentioned, we're so close now to midterms, and if history repeats itself, it's likely that the Republicans will take control. That probably doesn't bode well to Biden getting a whole lot passed in his last two years, which means I think we're probably looking at
less likelihood
significantly
of
less
significant tax increases,
likelihood of tax increases of government spending, if really honestly any at all.
And you may be seeing the market price that in as we approach midterm.
I mean, of course, we don't know, but
So, what else is on your guys' horizon? We got tax season coming up.
well,
So
are
that's
you
always
guys
fun.
still getting a lot of questions about cryptocurrency? I mean,
Yeah,
I still am.
absolutely. I
Maybe we
think
could just
what
spend a
we're
couple
seeing
minutes
in
on
that
it.
space is the solidifying of it as an asset class. We see huge market or
Interest.
well, no, we're seeing a lot of assets moving toward that sector.
Mhm.
So in varying forms in different capacities, but as the financial markets learn to package cryptocurrencies, you're going to see a lot more money
Mhm.
flowing to that space, whether or not
Well,
that's right or
Becoming
wrong.
easier to get exposure to. those
Well, I think
things.
it's becoming valid as an asset class.
Sure.
And we're validating it as an asset class as more assets move there, but how you buy, where you buy, when you buy, it's something to be considered. So just
I
like.
think
any
a lot
other
of people
stock.
are concerned about they don't really get it. I think they're either like, I don't get it, I don't even want to know about
I don't even
it.
think most people who invest in it get it.
Right, or,
Yeah, absolutely.
okay, fine, but like some people are just like, yeah, like, I can't even like think about processing that, so
The
there's
long,
that.
the long and
And
short.
then,
You want the long and short?
well, yeah, but hold on, and then then I do have a lot of people who are afraid they're gonna miss the boat. Which is a legitimate, I mean, concern. I mean, I don't want to say concern, but I mean, if you how
FOMO.
a lot of people didn't know where Amazon was gonna be,
Right.
20 years ago. I mean, that was after like the tech bubble, Amazon had no earnings, and a lot of those tech companies were gone by 2001 and 2002, but anyone who was willing to kind of take some chance on Amazon obviously probably benefited greatly. Same thing with like Facebook and some of these other companies. So, I mean, those are the things I hear, which is like, I don't get it. I don't really understand it. Number one. Number two, I don't want to miss the boat. Number three is, and the third person who is maybe a little more analytical, really just wants to understand it better.
Good point. Okay, so let's start real high with the crypto. So what is cryptocurrency? It's essentially decentralized coding that allows us to do varying things based on what we're trying to do. That might be a smart contract, a way of keeping currency, or now we're even seeing with NFTs a way to keep artwork or other things secure or allegedly secure.
Mhm.
It's really just a smart contract at the end of the day.
At the end of
Well-
the day, they're all just little contracts within the coding that allows autonomy as
But
well as
besides the
transferability.
currency, the big thing behind it is the blockchain technology,
Correct.
which can be used for other things. I think most people don't understand that. They
Right.
think of it
It's
as
not just a currency. It's many, many, many more things. Just like how when we got the internet, we said, oh, we're going to try this email thing. What do you use the internet for? A lot more than just email, but we're learning now what this technology may or may be able to do for
That's
us.
a good
Can
analogy.
somebody explain, how the
Well,
blockchain?
Well, I was just gonna say, yeah, that's a
works.
good analogy because you could think of the internet as decentralized also. The internet exists nobody owns it. And anybody who can plug an Ethernet cord into their computer gains access to it. But then it's up to them to write the program that uses the internet. And that's essentially the blockchain. The blockchain is not really owned by anybody. It's a technology that as long as you plug into it, you can write a computer program, you can write a code, you can create different
Well, and that's what miners
technologies.
are, right? That's what Bitcoin miners are. They're mining.
Kind of, yeah, close,
I
I know,
close.
well, I know, I'm just
Close,
saying,
but-
I'm just trying to.
But
follow you, 'cause that's
anybody
what
can
people
use the
do.
blockchain like the internet to create technologies that do things.
Mhm.
The miners are the ones who have to organize the blockchain to ensure that it's essentially recorded properly.
Donating their computing power to the cause for
Right.
an exchange of.
But that's just like a computer coder, right?
Yeah,
Somebody
it's a-
writing.
It's a hard drive.
Well, I'm
Yeah.
trying to make it, I'm asking these questions.
It's a big
to
thing.
try to make it understandable.
It's a very
too.
big thing and it's complicated
It's
sometimes.
Hard to grasp. I think the concept of the internet was probably difficult to grasp
Yeah,
Mhm.
from the beginning as well, so.
But we are considering that and we do.
But isn't it just
look at
pie
it.
in the sky thing? I think a lot of people think it's like, at first, maybe we all thought that, but
It's how all
it
things are,
legitimately
right?
has some fundamental value because of this
Yeah.
technology that's.
and
behind it.
fundamental risk. A lot of internet startup companies went out of business very quickly early on.
Yeah.
Think of what was it, Netscape? Right? I mean,
AOL,
Yeah,
yeah, we
there's
don't
a-
even know.
there's a lot of internet companies that
Yeah.
didn't become long-term players. And it's certainly the same thing with cryptocurrencies. There's a coin for everything. And some of those coins, may or may not be successful. And just like early startup and tech, it's kind of survival of the fittest at this point, which creates risk.
So with cryptocurrency, you have the actual, so there's the blockchain technology behind it, but then I think what also is a little misunderstood is what's the difference between all of these, like Bitcoin versus Ethereum versus, I don't know what other ones there are.
Mostly different purposes. Like what is that blockchain
Right.
script written to do? Is it a smart contract? Is it there to store value?
Right.
What is the purpose
So
of
the
that?
two main ones are Bitcoin and Ethereum, yes.
The two largest market caps, yes,
Right.
correct.
So Bitcoin's primary purpose was developed for as a currency.
Decentralized currency means.
But it's not really being
But you
used
can
that
use
way
it for
now,
other
correct?
things, though. That's the thing. You can use it in other ways.
Right.
So.
What's-
it's-
Bitcoin was, yes, it was essentially created to have essentially a non-fiat based currency, although now it much more represents what I think is more closely related to gold than it is to currency, more utilized as a storage of wealth rather than something to
Right.
transact with. But as Joe said, certainly you can transact with it. And maybe it will continue to move there in the future, but it seems like the direction of Bitcoin is more a way to store
Store
wealth than it is to
So-
spend.
So like a lot of our clients talk about putting money under the mattress or should I buy gold coin? I mean, really, and that's what you mean by a storage of wealth.
Rather than spend, most people aren't going to the grocery store and buying bread with gold,
Right,
right? But gold has a value. Where does its value come from? It comes from way more than its use in industrials and jewelry. There's an intrinsic value of gold that us as human beings say it's worth something, so we're willing to pay something for it. Bitcoin has essentially kind of become that, a digital gold. It's worth something not because it has a actual utilitarian purpose to it, although it may have some, but the majority of its value comes from the fact that we just are willing to spend that on it.
right. And it's not as weird of a concept if you think of it that way, because what is gold? What is money? What is that?
Well, money's a little bit different
Yeah.
because it's backed by a government.
Right, but I mean, like, it's still based on the
Full-
full faith
of
of
the
that
people using
government,
it.
in
Right.
There's a
The people
scarcity
in it.
component to gold. There's a scarcity component
to
to
Bitcoin.
Bitcoin.
Right.
Absolutely.
And I'm only saying that because I think when I first started learning about it, these are the questions that I asked
Absolutely.
Absolutely.
that helped me understand. So whoever's listening,
The
maybe.
one-
Okay, go ahead.
The one thing I will say is, in particular, clients who may be listening now, because we, tend to focus almost exclusively on the marketable listed securities like stocks, bonds, mutual funds, things like that. And let's just say, for all intents and purposes, the stock market. We have 100+ year track record of how these asset classes work. We have so much data and so many resources that we can reasonably predict within a 95% probability what a stock or an asset class will do in various economic circumstances, like how much will it go up and how much will it go down? And you as investors have really benefited from that over time. And in particular, the thing that we found with the stock market is, minus a few outliers like the Great Depression, the 2001 market tech bubble, the 2008 market crash, the stock market's relatively stable. Yeah, there's up years and there's down years, but they're not really that wide of margins over time. And that means that most investors who have a very emotional aspect to investing can tolerate the volatility. Even if your accounts maybe are down 10% one year, it's not 80%. And the thing about cryptocurrencies is exactly the opposite. There's no historical data. We talked about fundamentals before. We can kind of put a valuation of what Tesla's worth. There's no fundamentals when it comes to cryptocurrency. Right. There's really no way to say how much they should be worth.
It's very volatile.
Or if they're overvalued or undervalued.
So for us, it has to fit in that speculative category, which for most portfolios, speculative category is very thin.
And then the short-term data we do have, it's very clear to see that the volatility ranges are just significantly more. And yeah, they've had significantly more potential growth, but there's been periods of time where within the course of 1 month, they may be down 50%, 50%, or in the course of a year, 80, 90%. That may be okay because they can certainly come back, and for all intents and purposes, they have many times. But as normal investors who are used to, I should say normal stock market investors who are used to investing in the stock market, need to recognize that difference. And that is a whole different, emotional piece to this.
Well, there's different, right. And that's really an important point. People don't want to miss the boat, but they also have to realize that the boat could actually go down too. I mean, the boat could be the Titanic. I mean, we don't know enough about it.
We're talking 50-foot swells versus 4, 5, 6 foot swells. You're going to get seasick a whole lot faster unless you're a good sailor.
To that point, right, guys? I mean, we have to balance FOMO, fear of missing out, right? That psychological piece that we all have in us versus what are the realities of the world, what my needs are, and where we're at. So
we do have a question.
I got a question. Yeah.
If it takes this much talk to try to explain crypto, how does
not you,
Joe Public ever understand what it really is?
Well, you hire a great financial advisor. It does economic updates.
But let me also say, I don't think Joe Public does understand. When a cryptocurrency goes up 20, 30% overnight and they're asked why, they say moon. Whereas if a publicly traded company goes up 20, 30%, we can show earnings, we can show, fundamentals, we can show sales, we can show something that justifies that. There is no justification.
You're telling me that emojis are not quantifiable market data?
Unfortunately not.
Guys,
and I truly do believe that the majority of people, and I don't mean the innovators and the people who spend all their time researching and truly understanding a lot of this stuff, most people who buy cryptocurrencies have absolutely no idea really what they're doing. They're in it for speculation. Just like maybe, early other innovators were just in it because they wanted an opportunity, but not because they really understood.
But I think our opinion on that is that we still view it as a very speculative asset class. Absolutely. And it's not that we haven't given advice to people who want to buy it. I mean, there are now, ETFs that we can buy for clients to help them get exposure to this asset class, but we are very upfront in that they have to understand that this has to be money that like they would be willing to lose.
Right.
They could go down, like they would go down to the Meadows Casino or whatever they call it now and put your money on red or black. I mean, understanding that it is a very speculative investment. So we have not made a decision at all as a firm to incorporate this into our portfolios, nor do I know if we will anytime in the near future, but it's a hot topic for people. We want people to know that we are, we do believe there are other pieces of this it definitely is something legitimately that we need to be aware of.
And then there are cryptocurrencies that have literally zero application, that have really essentially no technology. They're created as a joke. Yet people have made millions of dollars on them. People have
Well,
also
that makes-
lost
because they don't
millions of dollars
understand.
on
They
them.
do not
Doesn't that sound like 2001? Doesn't that feel like 2001? Oh, I got this new tech.
Yeah,
startup.
it
Yeah,
does.
it absolutely does. No
Right.
Right, so
question.
Not that we were
there's
working
probably
on it.
going to be a few, I mean, definitely, there's different ways to buy crypto, which we don't need to get into, you know.
So let me
cold storage,
transition
hot
here.
storage, ETFs.
So as we talked about, we made it through 21. I think everybody was ready to get done with 21. What's on your guys' horizon for 22? What are you keeping your eye on, and what should the clientele be keeping their eye on?
Do you want to take that? or-
Sure. I think the number one thing that we need to watch out with is simply what the Federal Reserve does this year. They're going to be keeping a close eye on monitoring inflation and trying to do their best to essentially manipulate inflation, which I don't necessarily mean that in a negative way, but to use their tools in their war chest to figure out ways to control inflation. They've spoken several times recently about this, and they're pretty clear that they're looking at 3 rate increases, although maybe 4. I don't think that happens. I think we get 2. I think there's just going to be too much political pressure that we're likely not going to see significant monetary policy in action. And also, I think that the Fed is going to be watching very closely to try to ensure that we don't have an economic slowdown. That's the risk. The risk is inflation's too fast, too strong, too hard. The Fed comes out too fast, too strong, too hard. Interest rates increase too fast. Valuations of companies go down. Tapering, is just too fast, and all of a sudden, corporate earnings are slowing down, and
That's probably the biggest risk for a recession.
that's the biggest
That
risk.
is really.
Yeah.
what it is.
If you take that
Too
off the
fast.
table, though, which in my opinion, the cards are stacked against that scenario. I don't think we go into that scenario. If you take that off the table, though, there's a lot of still good fundamentals
Right.
left. Doesn't mean that the markets aren't going to be choppy. It doesn't mean that there's not going to be, a lot of volatility. There are.
Yeah, I think instinctively, like, we're kind of overdue. I mean, we've had some volatility over the last month or two,
Yeah.
but I still think it's been so quiet for so long. I think with all of this, we're probably going to continue to see some of that.
But I don't see like
choppy
a-
markets are normal. I mean,
Right.
that's,
I don't see like
They
systemic
are.
market collapse.
yeah.
Agreed.
In 2022, and the one risk would be if inflation is just too out of control
Yeah.
and the Fed goes too hard on it. So I mean, that's to
But
me
they're
the
also
number
very
one thing
aware
to
of that.
watch.
So I think, I guess it remains to be seen. Unfortunately, we don't have a crystal ball.
I
So-
think you had mentioned the tax code too, so whether or not they do make these changes, I think there's been some talk around restricting Roth conversions, so like we should keep an eye on that, and we do.
Yeah.
But I think being very proactive regarding this tax code is going to become more and more important,
Mhm.
especially for those in retirement situations with retirement accounts. And that's good because
Yeah.
we're on top of it.
I mean, even so, I think for the majority of our clients, it's not necessarily I wouldn't expect in the near future, they're gonna have significantly higher taxes. I mean,
Right.
That's
Not
where I
at this
stand on
point.
it. But
Yeah.
I think overall, cautiously optimistic.
Cautiously optimistic. I like that.
Positive outlook on 2022 with some of the caveats we talked about, maybe not as robust growth as we saw last year or even the year before, but
Still some bottlenecks,
and
still
don't
some
deviate,
existential
don't
threats.
deviate from what we know works and our principles, because that's what gets you in trouble.
Yeah,
So,
strategy hasn't changed.
no,
No.
I mean, it doesn't fundamentally. We adjust and it gets updated. So
Mhm.
we're here for you. If you guys have any questions or if there are any topics you'd like us to cover in future meetings, let us know. We might have some guest speakers coming up this year as well. And we promise to keep it relatively brief. So are there any questions before we sign off today?
We appreciate everybody logging in and checking this out, whether you're watching it live or you're watching it on the replay. We do appreciate you and all of your well wishes and your support, guys. So if you have any additional questions, feel free to reach out to us anytime. Other than that, we'll see you in a couple months here.
Happy New Year.
Happy New
Thank you.
Year.
Happy New Year.
Thanks, everyone.